I honestly think it goes without saying how important it is to create a tax plan. Now, this doesn't have to be something that's extremely overt. As long as you are setting up your business in a way that's organized, then this will just come organically. There isn't any extra effort you should have to put in. So, creating a tax plan for your business is an important part of managing your finances and minimizing your tax liability. When things are organized, you can figure out what can be deducted, what can be credited, and then when you go to file your taxes or have a CPA file your taxes, everything is in order and it's quick. You don't need to file an extension. You just get it done and you get that return back. So the first thing you want to do is you want to understand your tax obligations. This includes federal, state, and local taxes, as well as industry-specific taxes that may apply to your business. That's going to be things like sales taxes. You should also be aware of tax filing deadlines and the consequences of failing to comply with tax laws. So just mark your calendar a couple weeks ahead of time, maybe a couple months ahead of time. I like to do things every quarter. So every quarter I look at my finances, see where I'm at for each one of my businesses. So I sit down with all my CEOs, we go through our finances, and then my CPA is there and I say, hey, what's our deadline? Do we have any deadlines for the upcoming quarter? You don't need to have such an extravagant meeting, but look at your finances and determine what's coming up for the next 3 months. Next, you want to review your business structure. So your business structure can have a significant impact on your tax liability, which we covered this in section 1 and 2. But for example, sole proprietors report their business income and expenses on their personal tax returns, while corporations have separate tax obligations. So you need to review your business structure to determine if it's the most tax effective option for your business. Next, you want to keep accurate records. So keeping accurate records of your income and expenses is essential for preparing your tax returns and maximizing your deductions. Like I said in the beginning, you should use accounting software or hire a bookkeeper to ensure that your records are accurate and up to date. Now, if you are comfortable and organized enough and trust your organizational capabilities to maintain your own books, then great. Keep your own records. There are tons of bookkeepers who, work online. They're super inexpensive. I mean, you can pay maybe $40 an hour, but if you only need them a couple times a month, it's worth it. Build that cost into what you're charging. Then you want to maximize your deductions. So there are many deductions available to businesses, which we reviewed in the last section, including home office, travel, entertainment, employee benefits, all of these things. So you should consult with your tax professional to ensure that you're maximizing your deductions. But the main key here is to maximize your deductions, you need to be organized. You need to make sure you're categorizing your expenses in a way that tells you deduction or not deduction. Then you want to plan for estimated tax payments. So if you expect to owe more than $1,000 in taxes for the year, you might be required to make estimated tax payments throughout the year. So plan for this. Make sure you have enough cash flow to meet your tax obligations. And last, as always, talk with the tax professional to ensure your tax plan is comprehensive and tailored to the unique needs of your business. A tax professional can help you identify opportunities for tax savings and ensure that you are in compliance with all tax laws. So in the next couple of slides, I'm going to talk about what that looks like. And then in the very last slide, I'm going to give you some tips and tricks to how to actually find a tax professional because not all tax professionals are created equal. Some of them specialize in certain things. Some of them only do personal taxes, and even though you're filing a Schedule C, they might not know exactly things to do. I know the first year I filed my taxes, my tax professional didn't tell me that I could deduct, the depreciation value of my electronics. I was super disappointed that I missed out on a lot of savings. So make sure that you are doing your research, but again, we'll get into that later in this lesson. So I won't go too crazy here, but maintaining accurate and organized records is obviously very important and essential for any business. So proper record keeping not only ensures that you are in compliance with tax laws, but also helps you identify deductions and credits so you can reduce your tax liability. So first, you want to use accounting software. Accounting software can help you track your income and expenses and to generate financial reports that are necessary for tax preparation. So choose software that's user-friendly and tailored to the needs of your business. I love QuickBooks, but there's tons of other software out there. There's Xero, there's HoneyBooks, there's other options. Now, you don't have to do this. If you aren't ready to incur that cost, you're trying to keep your overhead costs low because you just started, that's okay. I gave you guys some templates so you can keep track of your records. But the most important record that you're going to need is your P&L, your profit and loss statement. As long as you're able to generate that, accurately, then you're pretty good. You're good to go from there. Next, you want to keep, receipts and invoices for all of your business expenses, including supplies, equipment, and travel. These records will help you identify eligible deductions, again, and credits to support your tax return in case of an audit. So keep them. You don't have to keep the physical copy, scan it, make sure you have some record of it in the event that you're audited. It's going to be very unlikely if you're following everything that we're talking about in this course. I can say that it's extremely unlikely that you'll be audited, assuming you're following all of these guidances. So next, you want to make sure you're separating your business and your personal expenses. So keep your personal and business expenses separate to avoid confusion and to ensure that you are deducting only eligible business expenses. Nothing is worse than it being the end of the year, it's tax season, and you're going through the last 12 months of your personal, bank statements, credit card statements, and you're having to highlight what is a business expense, finding the receipt associated to that business expense. Trust me, you don't want to do that. Then you want to make sure you're keeping records for the required period. So the IRS requires that you keep tax records for a certain period, typically 3 to 7 years. So make sure you're keeping your records for the required period and that you store them in a secure location. I highly recommend you have 2 copies, save them on, a flash drive or an external hard drive, and then store that in something that is waterproof. I'm speaking from experience here. And then just store it. Just put it away, put the date on it, and then don't look back at it unless you actually need it. And then, or you can erase those files or do whatever you want after 7 years. Next, you want to make sure that you're reconciling your bank and credit card statements. So you want to do this regularly to ensure that all transactions are accurately recorded to identify any errors or unauthorized charges. All this means is that you're making sure that whatever software you're using to track your expenses, or if you're using just an Excel spreadsheet, you want to make sure that Excel spreadsheet matches your business bank account. Now, if you have software like QuickBooks, it's going to actually integrate with your bank. So whatever you're seeing in QuickBooks should be what's being shown on your bank account, and all you have to do at that point is categorize the expense. It reconciles it for you, but you want to just make sure that you double check at the end of the month when you get your statement and just make sure that everything looks good. And again, I know I keep on saying this, but if you're unsure about record keeping requirements or you need help organizing your records, seek the help of a tax professional. They can help you identify eligible deductions and credits and ensure that your records are accurate and organized. Now, this is going above and beyond. So if you walk into like an H&R Block, they're probably not going to help you with this. If you're going to go to LZ Tax, which I love LZ Tax, that's a LegalZoom tax service that they provide. They actually do this. They give you templates, proprietary templates to them, but there's tons of information that they give you to help you make sure that you're, keeping accurate records. But if you aren't sure, then make sure you are looking for a tax professional. So in the next slide, we're going to talk about how to find a tax professional. Now, I know I keep on mentioning tax professionals, but let's go through some of the benefits of hiring a tax professional. First and foremost, they have specialized knowledge of tax laws and regulations, so including those, related to business taxes, so they can help you navigate complex tax rules and identify deductions and credits that can ultimately reduce your tax liability. Next is compliance. So staying in compliance with tax laws is extremely challenging, particularly for businesses that operate in multiple states or have employees in different locations. So tax professionals, their job is to stay on top of tax laws, and they can help businesses understand their tax obligations and to file accurate and timely tax returns. Again, they can help you plan, they can help you with financial and tax planning, and then we have audit support. So in the event of an audit, tax professionals can provide support to businesses and help them navigate the audit process, but they can also represent your business in front of the IRS or state tax authority. Some considerations for selecting a tax professional include credentials. So look for a tax professional who has the necessary credentials and experience, such as a certified public accountant or CPA or enrolled agent EA. These professionals have passed rigorous exams and are required to adhere to ethical standards. Next, we have specialization. Again, not all tax professionals are created equal, so look for a tax professional who has expertise working with the businesses in your industry. They'll have a better understanding of the tax laws and regulations that apply to your business and can provide targeted advice. And as always, ask the tax professionals about fees and how they're calculated. Some tax professionals charge a flat fee, others charge hourly rates. So make sure you understand the fee structure and what, services are included. And of course, availability. So look for a tax professional who is available to answer your questions and provide guidance when you need it. They should be responsive and they should provide clear and concise answers. Now, if you're hitting up a tax professional in the middle of tax season, you're probably not going to get an answer right away. But this is one of the reasons why I love LZ Tax, again, LegalZoom Tax. You pay a monthly fee. They have a ton of support. Every single time I've called them, I've always gotten a representative, someone usually who's in California, who knows California state taxes. I have businesses all over the country, and whenever I call LZ Tax and I put in the number associated to that business, I get a tax professional in my state. They're amazing. And then again, reputation. So look for a tax professional who has a good reputation and positive reviews from clients. So ask them for references, check online, obviously, if they have a website or Google or Yelp. But, ask them for references. Like, do you have references that, can say how well your service is?